All right, good day everyone. I believe each and every one of us here have gone through the three videos we posted earlier on candle range theory, that's CRT, on structure, and also on premium discount arrangements. If you have gone through those videos, then you should be able to draw CRT, that's candle range. You should be able to mark structure the right way now, and you should be able to fuse PD arrays together in order to formulate a sniper entry using candle range or a claim block. All right, as the case may be. If you haven't go through those videos, I would advise you to go and watch them first, get detailed explanation of what we discussed there before you continue with this fourth video on entries. And if you are new here, if you don't have access to those videos, I would advise you to go to our Telegram channel, search for Zenith Trades. Telegram will show you our channel. Download the last three videos we have there on candle range theory, on structure and premium discount arrangement. Try to go through the details, understand the basics ideas of what we discussed there before you continue with this fourth video on entries. All right, let's dive in on entries properly now. But before we dive in, we have to look at these three concepts, because these three concepts, they are key to our trading hedge. If you don't know these three concepts, there's no way you can have a proper expectation of how price move. So what's the very first concept is what we call price storyline. So let's look at what price storyline means. Price storyline help us to determine the current phase of the price movement. All right, when price is moving, let's say we are in an uptrend, we have a bullish order flow, and price is moving from creating higher low, higher high, higher low, higher high, higher low. That is a bullish move. So the storyline will help us to determine the current phase, because the movement of price has phases. And the very first phase is what we refer to as impulsive phase and the corrective phase. Let me explain this with a schematic diagram. I said price is giving us higher high, higher low. We have already discussed this in our structure marking, so this is not a simple structure. You should understand why those major eyes are coming to take out the inducement, that is the structural low. All right, so if we have a structure, a bullish order flow like this, and from our definition, they said price storyline tell us or help us to determine the current phase of price movement. So look at from here, price move, creating and what? A bullish, all right, an impulsive move. From this low, creating a minor high, retraces, giving us this pullback, then create a major high. Why is it a major high? From our structure, you sweep the liquidity of this high and also able to sweep the liquidity of this low. So here is a major high. This is a minor high. This is a minor high. This is a major high. I want us to refresh our mind, refresh our memory from the knowledge of structure marking. So this is a sweep, right? This is a sweep. Also, this is another sweep. So where our major highs now and where our major lows? This high is a major high. This high is also a major high. Okay, so now that we know that these highs, they are major highs, let's develop price storyline. When we start from this place, price move impulsively, creating a minor high. We have a pullback of that minor high. Then price move and break this high, which is we refer to as break of previous high. This is a major high. It's only when you break here we have a real break. This is a break of previous high. So this move is what we refer to as impulsive. This move is what we refer to as impulsive. Let me draw it with this move from this low to this major high. This is an impulsive move, right? So price retracing to take out the structural low. This pullback is the corrective phase. Did you understand? All right. This very first movement from this strong low to this high is what we refer to as impulsive move. When price now retraces back to sweep the structural low, the inducement is what we refer to as the corrective phase. So this is an impulsive move and this is a corrective move. We have after that as ended, then price continue to create another impulsive move. This is single leg because this is a minor high. Remember, another impulsive move, then corrective move. And from what I discussed during the structure video, I said that this move is, you can call it a CP, you can call it a range, depending on your, like people that trade demand and supply, they refer to this move, this complete range, as a CP, a continuation pattern, right? So just understand that, okay, in every of this movement, the very first leg of your M, right? After your, like I said, that you should always picture your structure as letter M. The very first leg of your M, creating the minor pullback, then break previous high. This leg is what we refer as impulsive move. Then the last part that come back to sweep this middle part, this pullback that created the structural low, is the corrective phase. Impulsive phase, then corrective phase for uptrend. For uptrend. For downtrend, we have the opposite. We have the opposite. When we have for a bearish order flow like this is the first impulsive move, creating a pullback, a minor high, then break of previous low. This is the impulsive move. Then we have the corrective move that will come and take care of this, uh, that will come and sweep liquidity of this high. I hope you understand this explanation. So the storyline helps us to determine the phase. This from here to here is the phase, is the impulsive move. This impulsive move, this is corrective move. How are we able to know that this is impulsive move? When we look at the previous price actions, we already know that, okay, from the previous price action, here is a strong low, right? Here is a strong low formation, and after a strong low has been formed, we anticipate price to do the same thing with a new continuation pattern or a new range. You can see what price did here is what it did here. So price will continue to do this until this entire movement objective is complete. Until this entire movement objective is complete, it will continue to create new CPs, new continuation pattern. You can call it CP, you can call it range. It will continue to create new CP or new range until the entire movement of that objective is complete. So you can see this is CP, price have created another CP, the same way here. So when we move from here, moving up, we know that this is an impulsive move. After the end of the impulsive move, it gives us a corrective move. This, the objective of this CP is complete now. Then price will now move again, create another impulsive move. After this impulsive move, we expect a corrective move, right? The objective of this range is complete. This leg now, from what we have done so far, we know that, okay, this is another impulsive move that will create a pullback, right? A valid pullback. Okay, this is another impulsive move that will create a valid pullback, give us another major high, then come back to sweep. That's what it refers to as storyline. When we check the previous price actions, right, we will be able to determine at what is the current phase price is. So when we know the current phase, it will help us to make proper decision. It will help us to frame our entries. I hope we understand what price storyline is now. So from the previous price action, when we just check the immediate price action before the current price action, we should be able to determine the price storyline. And in price movement, we have impulsive phase and corrective phase, and that's what I've just explained. This is a corrective, this is an impulsive move, a corrective move. So the storyline helps us to determine the phase. Impulsive phase, corrective phase. We have know the two phases now that price always exhibit when moving, either bullish or bearish. Impulsive, corrective. For bearish scenario, impulsive, corrective. Impulsive, corrective. Know that impulsive move do have pullback. Impulsive move do create a minor high and low. But the corrective phase, it do also create minor high and low, but it's not as you won't make reference to the pullbacks of the corrective move that much, because always is it move swiftly to come and sweep and continue, right? That's if it's in a bullish scenario. And if it's in a bearish scenario, it do move swiftly to come and sweep the structural high before going down, before moving bearish the intended direction. So you won't mind much of the pullback that the corrective move do. What's it called? Some people, you can trade it. When we get there, you understand the detail I'm trying to explain. But the impulsive move do create a valid pullback that the corrective move must come and sweep most of the times. Now, what is the phase? Phase, as like I've explained, I say we have impulsive and corrective. So this phase now is the each phase of price movement help us in determining the objective. Once we know the phase, okay, this is impulsive move. Oh, what is the objective of this move then? This is corrective move. What is the objective of this move? This is another impulsive move. What's the objective of this move? Another corrective move. So that's what they said. Each phase of price movement help us in determining the objective of that movement, of the movement at that given time. All right. We have impulsive move. The impulsive move always starts at the creation, after the creation of a strong low or high, and the objective is to create a new higher high or lower low. Let's say for a bullish scenario that I've just given here with a schematic diagram, if you start from this is a strong low, they say impulsive move always starts after the creation of a strong low, or this is a strong low. So the start of this movement signifies that this is an impulsive move, because from our previous price action we know that okay, the mission of the previous range or the previous CP is completed. So the next one, so far price is still bullish, the next one must be impulsive. The next movement is going to give us an impulsive move. So that's why they say it's always start after the creation of a strong low, that is for bullish, and the objective will be to create a new higher high for bullish scenario. After the creation of a strong low, and the objective will be to create a new high high. After the creation of a new strong low, and the objective will be to create a new higher high, that is a major high for bullish. This the end of the previous trend, the previous range, right? The previous CP, right? So this is strong low now. This is the previous strong low. This is a new strong low. This impulsive move starts here, and the objective will be to create a new high high. That's all what they are saying. Now the corrective move, it starts at the end of the impulsive move, that is after the impulsive move has ended. That's when the corrective move starts. And what's the mission of the corrective move? To come back to sweep the liquidity of the structural low. So when you are trading, if you are trading and you know how to mark structure the right way, if you are at this phase, in your mind you know that okay, this is the current phase I am. What's the objective? The objective is just to create a new high. After creating a minor high and minor low and giving me a major high, then I should anticipate that price will retraces from a major high to come and sweep the structural low, the inducement, before giving us a strong low. And it's from this strong low I can find my CRT. For those that have watched the video, I can also frame my entry using reclaim block, right? So that is the price storyline. That is, you know the storyline. The storyline give you the phases, the impulsive or the corrective phase. And from you now knowing, okay, this is the current phase I am in an impulsive move now. I'm anticipating a major high, right? Though it's a weak high, but it will retraces to take the structural inducement before movement. So now that you know that okay, this after a major high has been created, then I should anticipate a retracement, the corrective move, to come and sweep my structural inducement before moving. So that's basically all what this explanation and definition is talking about. The corrective phase starts at the end of an impulsive move, right? And the objective is to retrace it to sweep the liquidity of the structural low in an uptrend, which refers to an inducement. For bearish trend, it will retrace it to sweep the liquidity of the structural high. This is structural high now, the inducement that this impulsive move created before giving us a major low, right? It will retrace it to come and sweep the inducement or the structural high before moving down. It will retrace it to come and sweep. All right, I hope you can see the sweep there. This is structural high. You can call it inducement or your structural high. So I say we should picture our structure in form of letter M for bullish and letter W for bearish. So we understand what price storyline is, and what a phase is, impulsive or corrective. Then what is price objective? Price objective refers to the mission or what the current price action wants to achieve. Simple as that. The mission or what the current price action wants to achieve. Now that the storyline gave us the phase, when we check the previous price action, we know that okay, here a strong loss form and it's moving bullish again. This next movement is an impulsive move. That is the phase, impulsive phase. And when that we know that this is an impulsive phase, what is the objective of every impulsive move? Is to, in an uptrend, is to give a new higher high. So what is the objective of every strong low? Every strong low is to create a new higher high in an uptrend. Yes. Objective of every strong low is to create a new higher high. Objective of every strong low here is to create a new higher high. This is a strong low. Objective of every strong low is to create a new higher high. The storyline tells us what the phase is. The phase now tells us what the objective is. So you have to trade with the objective of the price movement in mind. If you don't have the objective in mind, you don't know what the storyline of the phases of the current phase of your price is, you will always be at the wrong side of the market. You always be at the wrong side of the market because you have wrong expectation. Let's say price is retracing from this major high and you say, oh, price has been moving down since. Even after it break this structural low, you are still anticipating for price to go down. Then you now want and click sell after it has already swept. Meanwhile, you know this is a strong low and 4H structure is bullish and you're following your 4H structure, the swing structure. After your M15 have taken care of this, have swept this low, you should anticipate a reclaim. All right, what tell you that this is going to, you should anticipate a reclaim is because you know the price storyline, you know the phase, and you know the objective. I believe you are following my explanation. Why did you anticipate a reclaim after the sweep of this structural low? Is because you know the price storyline that this is an impulsive move, right? This is the pullback it created, and the corrective move will always come and sweep the pullback before moving further, before creating a new impulsive leg, right? So if you don't know about the storyline, about the phase and the objective, you will be at the wrong side of the market. You have a wrong expectation in the sense that as this is moving down, even after sweeping this leg, you will continue to sell. And once you sell and price reverses, reclaim the block, it has already hit your stop loss. So that's why you need to have the price storyline. You need to know how to read the storyline in order for the storyline to tell you the current phase of the price, and also the phase will now let you know what the objective is. The objective of every strong low is to create a new higher high. In an uptrend, this is a strong low here, this is a strong low here, this is a strong low. So how is it a strong low? Our previous price session here let us know, okay, this this pullback, this retracement before was a corrective move that come and take care of the previous structural low. So that's why it tells us that, okay, this is a new strong low formation, and this strong low formation it reclaimed, or CRT formation happened here that reclaimed the M15 block that was invalidated. Then we enter, giving us this impulsive move. Now this is an impulsive move. What is the mission or the objective of every strong low? To give a new higher higher. It gives us this higher high, a major high, and this major high, after the major high we expect a corrective phase. That is the corrective move to come and sweep the inducement. After sweeping the inducement, the mission of this total range or a continuation pattern is complete. Then another what's it called, strong low has been created. After this strong low has been created, what from the storyline we expect a new impulsive move. So far price is still bullish. So far the previous strong low has not been taken out. So far it is only the minor low that was swept. Price is still bullish. So we expect a reclaim. Why do we know that? Because on PDRA I was talking about what if the block failed. So this video is going to help you to understand when to anticipate a fail, or a price to fail, and when to anticipate for it to reclaim. Places where you anticipate for a particular level to fail, or a particular block to fail or hold, the price storyline, the phase, and the objective will guide you. I hope you understand, because I know people will be confused when I say, okay, what if this one failed? What if a block fail, it turns to breaker? If breaker fail, it turns to mitigation. It turns to reclaim block. If reclaim block fail, it turns to reclaim breaker or reclaim mitigation. So how are you going to know if it's going to fail or it's going to hold? The storyline, the phase, and the price objective will always guide you. Here, when we move impulsively and create a pullback, we know that so far the strong low has not been taken out. We should expect a reclaim. The M15 block will be validated, giving us inverse FVG here. Why will we expect a reclaim? Is because we are bullish in 4H and the strong low has not been taken out. Then we should expect a reclaim at this point, right? So you know that the 4H, the M15 order block will be validated, but the 4H fair value gap will serve as support, because our 4H fair value gap is always here like this. After, at the start of every impulsive move, we expect a 4H fair value gap. At the start of every impulsive move, we expect a 4H fair value gap. In most cases, at the start of every impulsive move, we expect a 4H fair value gap. This is for bearish scenario. So that when your M15 order block here was invalidated, the 4H fair value gap will serve as resistance for bearish scenario, and it will serve as, once it serves as resistance, then it will push price to reclaim the M15 block that was invalidated, and from there you're going to enter with reclaim block. If CL2 gave you confirmation, you're also going to use CL2 to enter. So at the start of every impulsive move, there is, most of the times, there is a creation of 4H fair value gap that price will tap into and support it. That is for, if it's for what's it called, bullish scenario. It's for bearish scenario to serve as resistance to push price down to reclaim the other block that was invalidated. So the price storyline, the phase, and the objective will let us know, will guide us to be at the right side of the market, to always let us know, okay, when we should expect a failure of a particular level or block, and when we should expect a reclaim. I hope I am making my explanation is like you're trying to understand what I'm trying to explain. So I said the storyline, the phase, and objective will always guide us on when to expect a failure and when to expect the price to reclaim certain blocks or certain levels. All right. So I believe we understand this. We understand the price storyline. The storyline gave us help us understand what the phase is, and the phase, from the phase we're able to understand, okay, the phase will give us what the objective means. And objective is the mission of the objective is always to create a new the objective of the mission, the price objective is the mission, or what the price or the current price I wanted to achieve, right? Price objective refers to the mission or what the current price action wants to achieve. So objective of every strong low, in summary, is to give a new high, and the objective of every strong high is to give a new lower low. Let's have that at the back of our mind. So let me go to some of the schematic diagrams I drew to understand this properly, for you to understand this properly. And after this, we will go to the live market and show us different examples of these entry patterns, so that you go and practice as much as possible for you to get detailed idea of what I'm trying to explain. So look at this CP A, B, C. This is a continuation pattern. You can call it a CP for demand and supply traders. You can call it a range, right? Just picture it at the back of your mind that this pattern is what price will continue to do. For bullish scenario, after this pattern is complete, it means the mission of this range is complete. Price will go on to create another leg, right, like this, and if you continue creating the same thing, so this low is a strong low. Why is it a strong low? Our previous price action let us know that, okay, this is a strong low. Maybe price retraces from a major high. All right, price retraces from a major high to this strong low, and after this strong low formation, it reclaimed the other block that was validated. And as it reclaimed, we enter from there, and as we enter, we know from the price line that after each strong low formation, the next move is a bullish impulsive phase. The next phase is an impulsive phase. So you can see that the movement from A to B is impulsive. It will create a minor structures inside, a minor high and a minor low. The minor low is referred to as the inducement that the price will come and sweep before moving impulsively again. So this is impulsive move, and this is the corrective phase. Now, in every CP, you have 3 on 4H. On 4H, when you're marking, you have to mark your structure on 4H. So when you are marking on structure on 4H, you have 3 entries on 4H, 3 entries on every CP formation and every continuation pattern. So when a strong low is formed, this strong low, it invalidates a 4H. Sometimes it will stop, it will not sweep the, what's it called, it will not sweep the M15 order block here at the middle of this pullback. All right, but most of the times it will sweep it. Once it sweep it, it will tap on the 4H fair value gap, and once it has tapped on the 4H fair value gap, we should expect a reclaim. If we didn't see CRT on 4H, then we should expect a reclaim block. Why are we expecting a reclaim block? Because the previous low, strong low has not been taken out, and so far the previous strong low has not been taken out, and our 4H is bullish, then we should expect a claim. We should expect a reclaim. So this is the very first high probability entry using a reclaim block. You can see a reclaim block, or you see CRT on 4H as confluence. If you're on 4H and you do not see any CRT formation after tapping on the 4H fair value gap, then go to M15 and look for a reclaim block. You will definitely see a reclaim block. So far the trend is still going to be bullish. It's still going to continue bullish on 4H. So after giving, once you have entered here and price is in your favor, every this is 4H. For day traders, you may not really hold the trade till it gets to the major high or this minor high before you exit. You must have exited. But for you to always find entries, your second entry can be on mitigation block. This is a mitigation block because this FVG that was formed here, I said after every strong low formation, at the beginning of every strong low formation, every impulsive move, we do have an FVG, a 4-hour time frame FVG creation, and this 4-hour time frame creation, price will always pull back to it. It will pull back to it before it will give us a major high. Why is it pulling back? It's pulling back to mitigate orders here, orders that were left here. So this mitigation you can also enter. You can also enter here, but ensure that there is always overlapping, right? Maybe there is a high here from a previous trend giving you some weak formation here from candle formation here. Ensure that this your low, this pullback overlap with the previous candle here, forming in form of a breakout block. Ensure that it overlap, right? Ensure that there's overlapping. I will explain what overlapping is properly when I get to the live or what's it called market. So ensure that it overlap, right? So when it overlap this way, it's high probability. This is, it can be mitigation, it can be breaker depending on the nature of the price action at that very moment. But if you have a previous price action and you reference this your block to any of the highs that was invalidated before giving you this pullback, then it's a breaker. If it is from this existing trend, but this is a strong formation, though this is change of character, so it must be a breaker. So you can enter from this leg, this minor structure that was created here, giving us a major high. And after the major have been created, though I do not want you to prioritize this pullback trading much, because there are some cases price will create minor legs here, because the minor low, this pullback is not limited, is not for you to have a complete CV. There are sometimes this minor low is more than one, it's not just one. Price will continue series of minor legs here before it will finally come back to pick any one of those legs, then continue with the bullish move. All right, so I will not want you to prioritize this, but if you are skilled enough, if you get to a term you are skilled enough with structural marking, then you will always know when it's time for price to actually come back to sweep the liquidity. The last low here will be taken out, and having the last low here will be taken out, there are some series of fractions that you will also see. Maybe price actually go back to mitigate the fair value gap. It must always have a fair value gap. Price went back to mitigate the fair value gap, or a breakup block here, then enter from that breakup block. Why did you enter? Because the price storyline tell you that okay, this leg now is a corrective move, and since it is corrective move, the objective is for it to come and sweep the structural low. I believe you understand why we need the storyline, the price objective, and the uh, the phase. All right, so the impulsive move, the corrective move. The objective of every low is to give us a new higher high in a bullish scenario, and the objective of every corrective move is to come and sweep the low of the structure, the low that was the pullback that was created, I believe you understand what I'm trying to explain. I believe you understand what I'm trying to explain. So you can see how price objective is going to help us to always develop the right expectation and not to always be at the wrong side of the market. Without a concrete storyline and objective in mind, a trader will always develop wrong expectation. Without a concrete storyline and objective in mind, a trader will always develop wrong expectation of price movement, and will always lead him or her to losses. So You can't expect me to find a CRT formation maybe immediately after this move, after I confirm that this is a strong low formation and I see what's it called, a CRT formation here on 4H telling me to short. All right, I will know, okay, this is likely going to fail because price just create a strong low. So what's the objective of every strong low? Is to create a new high. Price just create a strong low. It has not even reached to the place where, okay, I can anticipate, okay, this is a pullback. Even this pullback, you are not trading it because it can reverse at any time. It can reverse at any time. For people that trade supply and demand, you can use Fibonacci to like determine this your pullback. If you place your Fibonacci from the beginning of that move to the end of the minor high created, you see that this your, what's it called, your, okay, this is a diagram, this is just a diagram, it's not this is just a diagram. The low, okay, this low will always be on top of the fair value gap and it will be in line with the 0.5% of your fair value gap. This low will always be in line with your 0.5% of the fair value gap. And for you to determine this corrective phase, when you move your Fibonacci to the end of the major eye, then this corrective phase will always tap on, you should find it below 0.618 here, right? You see, you find it below 0.618. But for you to use Fibonacci to trade, it's like you are predicting the market, and you predict the market, you find yourself at the wrong side of the market also. But we structural and liquidity traders, we always react to price action. So we want price to do whatever it wants to do before we take action. We want to see CRT formation before we enter. We want to see price reclaimed before we enter. Price cannot just be coming here and once you tap on FVG, we say, okay, we are entering. We want it to see, we want to see price reclaim the M15 order block that was invalidated, so we cannot enter on the retest. We want CRT to give us confirmation to trade this in line here. I mean here, we want CRT to give us confirmation so that we can trade this in line with 4H. Always trade in line with 4H. Do not trade against the objective. What the objective of a strong low is to give us a new higher high. So we are trading in line with the objective. We are not trading against the objective. What's the objective of every major high that will give us the corrective move is to come and see the liquidity of the structural low. Trade in line with the objective. Do not trade against it. I believe we understand what the storyline, what the objective, and what the phase is. The objective of every strong low is to give us a new high for bullish trend. The objective of every major high, that is the start of the corrective phase, is to come and sweep the inducement. Trade in line with the objective, trade in line with the 4H swing structure. Do not trade against it. Do not trade against it, except for this scenario, and I have explained the things you're going to see to make this one also high probability. But if you are not that skilled in structure marking for now, stick to these two entries that are in line with the 4H structure, that are in line with, in fact, I will kindly advise you to always trade in line with the 4H structure. Trade in line with the objective. If the moment this price pull back to this order flow, to this fair value gap, when price move from here and I see any CRT formation telling me to short, I know that the objective of every strong low is to give us a new high. The objective is for me to move from the price is from to move from A. If probably the previous high is here, the previous high that retraces is here. So far price has not taken out this high. I know that price will definitely surpass this high for me to give me a new high. So I don't expect to short CRT formation here telling me to short. I will rather wait to look for probability on a CRT that will be in line with this move, so that I will just follow it up. So that's the essence of you knowing the storyline, the phase, and the price objective. All right, let's continue. Okay, this is a diagram showing us how we are going to relate the fractal relationship between different time frames as we uh, trade. All right, we know that, okay, this is higher time frame, what's it called, higher time frame FVG. Now let's call this major trend. We understand what major trend and minor trend is, so let's call this major trend. Let's say this major trend is weekly. So when price move from this strong low formation of a weekly time frame and this minor trend, let's represent it as 4H. So we are trading the 4H, we are following the 4H time frame. If 4H is moving bullish, right, and it's giving us the storyline, the phase, and the objective. How are we going to know that we should stop following the 4H this way? How are we going to know that we should stop following the 4H this way? That is if it starts on the higher time frame or the PDRA, right? That's draw on liquidity. And what is draw on liquidity? Draw on liquidity is telling you that okay, the objective is complete. When the price draw on liquidity, it's telling you that objective is complete. And how are you going to know when a price draw on liquidity? You can check your daily or weekly time frame. For example, in this scenario, we can see that this green major trend is our weekly time frame. So why is this internal structure 4H going bullish? It's going bullish because a strong low just formed here, and we anticipate a impulsive move, which is this impulsive move. But every impulsive move must have a minor high and low. It will create minor highs and low before giving us the final major high. So here, why did the 4H shifted bearish a little is to facilitate the pullback of this weekly trend to give us the pullback, right? It shifted bearish to facilitate the pullback of this because price is fractal. What price is doing on the minor time frames like M5, M1, M15 is doing the same thing on the higher time frame, higher time frame of let's say for daily and weekly. So if this major trend is a weekly time frame now, and the minor trend you are trading inside, you are following, the 4H you are following is this reddish internal structure. It shifted bearish here to facilitate the pullback of this weekly time frame. And once you facilitate the weekly time frame, the pullback of this weekly time frame, you know from the storyline and from the impulsive leg that once this tap on the weekly FVG, then it's going to give us a major high. So you are trading in line with the objective. So once it shifted bullish here, it shifted bullish to facilitate this impulsive movement to finally give us a major high. And what makes before it shifted bearish again, what it make it change structure? What make it change structure here, change of character, is because the corrective move of the weekly have started. So for you to know the overall trend, the overall objective of each of these CP creations, maybe okay, I said after like 4 or 5 CP, the objective of that movement is complete. If you are trading 4H with regards to each of the phase like this, you know this is a complete CP, a strong low, a major high, a strong low, a major high, a strong low, a major. How will you know okay if this is likely going to change character? Is for you to look at a higher time frame. Where is my major high in the higher time frame? Where did I expect the impulsive level to reach to? Where will it draw on liquidity? Drawing on liquidity means where will it touch a fair value gap, a hold high or low? Where will it going to mitigate a rejection block or a daily high, daily hold high or lows, or a daily fair value gap? Where is it going to touch it? Once it touch it, then it likely means that the objective of the whole movement is complete. I believe you understand what I'm trying to explain. It likely means that the objective of the whole movement is complete. So this is the fractal relationship between your 4H that you'll be trading and how you're going to check if the overall movement changes bearish or bullish. How you're going to know if the objective of that overall movement is complete, so that it's going to guide you on how you are not going to be on the wrong expectation once the objective of the whole leg has complete. Let's say you are on a daily time frame or you're on weekly time frame, and weekly is bearish like this. So and 4H moves bullish, right? 4H moves bullish. If 4H is bullish and you are trading your 4H, you are following your 4H. Once you sweep this weekly high, right? And there is weekly FVG here. There is weekly FVG here like this, and price has already swept this high. If 4H tap on this and give a sign of change in structure, change in direction, you should know that the objective is complete. You should know that the objective of this whole movement is complete. Maybe you're trading 4H for for days, following it like this, following it like this, following it like this. There's a time it's going to touch this weekly FVG and sweeping this structural high. After touching this, if you see any sign of change of character here, know that the objective of that movement is the overall objective of those CP formations are complete. Then expect for it to reverse then continue with the weekly pro trend downward. I believe you understand all this. So that's how the storyline, the phase, and the objectives will help us always be at the right side of the market. Okay, so that's for the fractal relationship between each of the time frames that you're going to do your multi-time frame analysis. And this is for the bearish scenario. The first one I showed you was for bullish. This is for bearish. All right, so you see just the opposite, just the opposite. This is the impulsive now. The price created a strong high, and what the objective of every strong high is to give us a new major low. Though major low is weak because price is bearish, every strong high will definitely give us a major low. So far the 4H is still bearish, and it has, the objective is not complete yet. Maybe it hasn't drawn on liquidity, or it hasn't taken out the previous low, so it is still move bearish until the objective of the whole movement is complete. But within a CP, for you to get your entry, this is an impulsive move. After price move impulsively, it created an FVG, then expect a pullback. As price expect pullback, as it tap on the FVG, or maybe it may not even tap on it, you see candle range on CLT entry here, formation here, then you should enter. Because why will you enter? Why will you enter from here? You know that, oh, the objective is to give us a new major low, right? You follow and trade in line with the objective, not against it. And once a new major low has been created, how will you know that this is a major low? Maybe change of character happened here, it take out the previous minor low high, right? Then it retraces with FVG. There may be a breaker block here. Enter. Why are you entering? You will know that, okay, this is a corrective phase, and the objective of every corrective move is to come and see the structural high on the bearish scenario. Did you understand all this? I believe this explanation, they are very clear. Even someone that have not traded before at all will understand it. They are very, very clear to the extent that even someone that haven't traded before, maybe you're just new to technical analysis, you should be able to understand all these things I've explained. With this now, let's go to the live market. Let me show us some examples of which asset is this. Simple one. Okay, this is for each. Let me pick some assets and explain to you all these things I have said, so that you can get it clearly, and how you yourself can also go ahead to frame your entries using this strategy, using our hedge. Okay, so this is jump 10 index. Let's look at some of these things we have said. Let's use price storyline, the price phase, each phase of the movement, and the objective to determine how we are going to frame our entries. All right, I've already marked some of the, what's it called, the price actions, so that we're not going to waste time explaining it. Okay, so let's start from here. It's like, did I mark anything after that? No. Okay, let's start from here. Let's start from this low. So the price from the daily time frame, price is bearish. How did we know that price is bearish from the daily time frame? Okay, good. We know that price is bearish from the daily time frame because this is the last strong high formation on the daily time frame. Okay, should we, is there any for us to go to daily? No, daily and 4H, there is not much different. But here you can see, from what we understood from structure, this high did not sweep any minor high, so it is an internal structure. This is an internal structure. This is not a major low. Why is it not a major low? It's not able to sweep any high. So this whole move down here, it is what? A single leg. Even to this place is a single leg. So price move from, we started here, price move from here just to mitigate this breaker, just to mitigate this breaker. The whole leg like this, do not be confused, do not be confused. We are not trading, we are trading the 4H. So I just want us to understand the price storyline, how we're going to use the storyline to always formulate our, what's it called, the face, and the face telling us what the objective is. So do whole move is what? I mean to this place is a single leg, it's a single leg, it's a single leg. All right, so from this low now, from this low, let's see, this is, we're already in 4H, we're already in 4H. Flashback, I said your structure marking on 4H, you should always picture them in form of information. The impulsive leg, we always create a pullback first. So look at, from here there's not any valid pullback. Where we have a valid pullback is here. So it created this minor low, it gave us a major high. This is a major high. Now I didn't mark it as a major high because it's weak. I'm only marking the strong lows. I'm only marking the strong lows. So it come back to weak. I mean, weaken means it's sweep. Okay, it has swept it here. So let's take this one out. You can see that's an information. That's an information. uh this is an information. We can see that is for the first leg. So, and what happened? Price move impulsively, gave us this minor low. After giving us this minor low, it moved again, give us a major high. Price come back to sweep. So from this analysis now, we can enter here using, there's no CRT here, but we on this, this is synthetic trading, right? And with synthetics there is no playback. We should have used playback actually, but still we are going to, when we get to the recent price actions, we go to M15, we will look at how the entries look like, how to mark it. But let me just use this part to tell us how you can use storyline and faces together with the objective to always be at the right side. So that's our information there. You can enter with what, reclaimed block. Reclaimed block. When we go to M15, if I say we should shift to M15 now, what date is this? This is 20 February. Before we can come here, we may not even be able to come here before they will delete the previous price action, because we're already, this is early May, right? So price come back to sweep. You see, the objective here is to give us a new high. After a new high, price sweep. The objective of that CP continuation pattern is complete. We expect a new continuation pattern. So what are we going to do? Price move impulsively. This time around, it created a fair value gap, 4H fair value gap. So it gave us what's it called? This minor pull, this valid pullback, right? Before giving us all this one, the internal structure. You can see no any one sweep below. You can see I can bold it very well. You can also go and check this price action on jump 10 as of 25 February, right, 2025. So you can go and check this price action. No any low was swept, no any low was swept until it gave us this what's it called, major high. And giving us this major high, it come back to sweep this low, giving us this what's it called, low. So that's another information I hope you can see. So what is the objective here? Objective move to give us a new II. It give us a new II, come back to sweep. All right. So here in this case, it pulled back up at the beginning of this impulsive move. It pulled back, creating what we call a structural a low, or some people do refer to this as engineered liquidity. Either moving, when it's moving possibly the first pullback before the main one, the price come on sweep, or when it is coming back, it will create an engineered liquidity here for it to sweep before it will continue. So either case, some people do refer to this as engineered liquidity, but you see it pull back. But why are we sure that it's still bullish? It did not take out the previous strong low created. So price create this minor high, minor low, another minor high, minor low, before eventually giving us a major high. It means the pullback here is 2 before eventually giving us major high, right? So when it gives us a major high, it has mitigated the breaker block. So after it has mitigated the breaker block, we should now be cautious because price is bearish. What is the objective of this entire leg? From your multi-time frame analysis I talked about, the objective of this entire CP movement is to mitigate this breaker block, right? Is to mitigate. That's why when it now touches this breaker block, the next move we anticipate for price to sweep and give us a new II, whereby this low will now be our next strong low. But that's not the case. The price gave us this low. We anticipate that even though we trade this leg as a strong low, we make our profit quite all right. This is 4H, and you look at the series of candles created before giving us this high here. By the way, this high did not give us a new II because the objective is complete. The objective of this entire movement is complete. That's what I wanted to understand when we are doing our multi-time frame. So the objective of this entire bullish move, it created two CPs. It created two ranges. The first one, it created a strong low. The second one, but on the third, wasn't able to give us another new II. So the objective is complete, and what we call market structure shift happened. So you see how the storyline, how the phase and objective is giving us, leading us, uh, the signals on how we always be at the right side of the market, right? So when price fail to give us a new II, then we should anticipate market structure, what's it called, shift. And what happened? Market eventually shift structure. So as this is coming down, we have to be very careful. We after sweeping, it does not even giving us a new eye. Talkless of us to think of after sweeping, we know. But as it shifted bearish here, invalidating the last strong low we're supposed to hold, we now know that okay, this is bearish. So price created a major low. Here we won't know if it is a major low yet until it go back to sweep the structural high that was created. After sweeping the structural high, we know that it has invalidated the previous strong low, right? Now we know that it is fully bearish. We can enter from here using, did it give us a CRT full? Yeah, that's a CRT confirmation. If I get to the recent price action, I will also dwell more on CRTs again. I will dwell more on CRTs again, and also on the claim block. But let's just continue to follow it up like this, because we can't go to M15 and draw them out here now. We won't be able to retrace back to 14th of March. So it sweep this eye. This is a minor eye now. This is a strong eye formation. What's the objective of every strong eye formation? Is to give us a new lower low, a new major low, right? Lower low. So and price eventually, you see, this is an impulsive move. It created a fair value gap. It filled the fair value gap immediately. Then you can enter this. This is this candle closes inside this range candle. If it does not give you a CRT formation, go to M15. You see a reclaim block. It gave us a new lower low. Then what is the aim of this eye? The objective of this eye is to give us, it has given us a new lower low. You see, this is the last valid pullback. Price go up, sweep it. As price sweep it, this is the retracement, the corrective move, the corrective phase. After the corrective phase, we expect another strong high formation, a new strong high formed. And what the objective is to give us a new lower low, and that's exactly what happened. So the price objective is telling us where price is likely going to go and how we are going to trade in line with its objective. So any CRT we formed, any CRT we find, right, we find that is in line with this swing structure, in line with the objective, we are going to trade it, and if we hold, we will always be at the right side of the market. That's if you have this proper knowledge of structural market. Are you with me? So why did we price? It seems like okay, here price try to sweep this high, but why is it not valid? This is a minor low. This is a minor low. The previous major low has not been taken out, so this sweep is not valid. It is a single leg like this. This is just a minor low, a minor high. This is the real retracement, right? The liquidity here have been shifted here. So price actually come back. Is price after creating this, it gave us the real major low, and creating this major low now, there is a change of character, a CSD here. It created a fair value gap. Then we can trade this. We can trade this. I told you that whenever price moves, whenever price moves this way, and it gives a fair value gap, right? This in form of a counter trend now, because period to this time we don't have anything like market structure shift, but it changed character. It created a fair value gap. On the retest of that fair value gap, you can trade it as what? A breaker block, and price mitigates the breaker, it pushes up. So pushing up, your anticipation is that okay, this bearish trend will hold, will continue. After the sweep, we anticipate a what? Market, the bearish continuation, the 4H pro trend continuation, but price did not retrace. As I said, we react. We do not, as we do not predict. Our prediction should be that okay, this is a strong high, it will hold, right? This is a strong high that we hold because price will continue bearish. Daily is even bearish. So we anticipate that price will continue bearish. The 4H structure will continue bearish. But after this, the sweep of this high that we anticipate price to continue bearish, price did not continue bearish. Price didn't continue bearish. It break this block, this other block. And once it breaks this other block, That means this is the last high price supposed to respect, and you didn't respect it. That's create market structure shifts. That creates market structure shifts. And you see, as you create market structure shift, it creates a breaker block. This block that was invalidated is from a previous trend, now a new trend. And market retests it. The moment it retests it, why do we understand that okay, this breaker block is going to hold? It gave us a clean CRT formation. As price retested on 4H, it gave us a candle closes inside. I hope we can see here. Candle closes inside. We'll just go to 4H and mark our CRT out. Then we will enter and continue with the trend. We enter and continue with the trend. Because here the breaker hold. The breaker hold. How do we know that it's going to hold? The CRT gave us confluence. As price touches it, it rejects, and the previous 4H candle, these two new candle closes, and you see the next candle come back to the 50% or 75% of the week. For those of us that know CRT, this is a clean confirmation, okay, to trade this in line with the objective. Because now that it has break it, this is a now this now become a strong low, and what is the objective of every strong low is to give us a new major high. And all this while price is moving up, no any valid pullback, no any valid, okay, there is a pullback here, but we can't call this a major, what's it called, a major pullback yet. The only place we have a pullback, major pullback we can make reference to is here. So it's like, oh, the whole this leg now is one leg, impulsive move, it create a pullback, then finally give us a major high, finally give us a major high here. So the whole of this leg, the whole of this leg is our now is the impulsive move now. And after the impulsive move, we expect a corrective move. And what the corrective move will go and do, it will just go and sweep liquidity of the pullback. You see, price come back to weaken. Weaken means it sweep the liquidity. I hope you understand this thing. So the whole leg is impulsive move, and the beginning of the corrective move after giving us a major high is to come and sweep. All right, but as price is giving us that corrective move, I said we can trade against the 4H so far that we know how to mark structure the right way. And what gives us the confirmation? Price invalidate the previous low and it retraces to mitigate, and in this form now this is a breaker block with clear overlapping. I say I'm going to explain what overlapping means. Even here we can trade in line with this impulsive move. Why? This is a clean simple mitigation with overlapping. I can't go to M15 and see the details, but even on 4H, you see that for a price to overlap using either breaker block or mitigation block, for you to find high probability breaker block or mitigation block, if it has FVG, with FVG, just check as price is mitigating the block, the breaker block or the mitigation block as the case may be. Check the wick of the previous candles that serve as support in this case, and check the wick of the recent candles that are trying to mitigate that block. They should touch each other. You can see in this case, this might not the block itself. This line I drew, the wick of these candles that mitigate the block and the wick of the previous candle that serve as support, they touch each other. If they do not touch each other, there is no overlapping. But if they touch, that is clean overlapping. You can even enter at the point of it touching. Once you're sure that that mitigation block will hold and you are trading in line with the objective, if you're sure that that mitigation will hold and you are trading in line with the objective, you are following where the 4H swing structure is going, enter at the point of it touching the wick. Once you have drawn your line previously, as it is touching the wick, go to M15, enter. You find a reclaim block, enter. You find CRT, enter. In line with the objective. The same way, that's what happened here. As price invalidated this minor low, price retraces to this breaker block, right? It's a breaker block because this resistance now is from a previous trend, from a previous leg. So this is a breaker block, and you see clean overlapping. If you did not see overlapping in a breaker block or mitigation block, as the case may be, it tells you that it is not high probability. But if it is, let's say, as this price is raising, it is not, when you draw your line, it is only the fair value gap that is present. You do not see anywhere price, the wick of this one touches the previous candle that serve as resistance in this case, that is not overlapping and it's not as high probability as the one you find that it is overlap. So if you have drawn your line previously and the candle traded up to come and touch it, you can use it as your entry. So we make this breaker block is high probability because we are trading in line with the corrective move objective. What's the objective of the corrective move? To come and sweep this low. All right, change of market structure shift have happened. We are now in bullish trend. For it is now bullish. All right, so after a strong low has been formed, a strong low formation, okay, we are close to the recent price action. Let's now look at how we are going to enter. Let's look at how we are going to enter. For example, let's look at this strong low. You see, it tapped on the previous breaker block. At the same time, it swept liquidity of our minor low. All right, two confluences. This previous breaker that was formed will serve as our fair value gap, and it has already swept the minor low it's supposed to sweep. It means this leg, this corrective movement is complete. The objective is complete. Once the objectives are complete, you can see that it's even rejecting. So it's rejecting to tell us that, oh, this downward movement is complete. Oh, let me continue with my bullish trend because market structure shift have already happened. I can just come back. This is my CRT. Let me mark this CRT on. Let me mark this CRT for those of us that have watched CRT. So you are going to understand what I explained there in that video as I'm marking it here too again. So look at this range candle here. The first CRT gave us that we can trade. That's the range candle. Now look at my turtle soup candle here. I hope you can see. I draw it to the next candle, then only the wick, only the wick. Now I believe we should be able to, this is a recent price action, we should be able to look at where I marked something. Now let me cycle so that we won't get lost when we turn this to M15. Oh, let me cycle it. So any mark we did now, we cycle it so that we'll just come back to it. Okay, let's go to M15 and find out what we just marked. Let's go to M15. Oh, okay, that's M15. Let's go to M15 and find out what we just marked so that you understand what I'm trying to explain using the storyline and every other thing on 4A, storyline, face, and the objective to find your entries. The storyline, the objective, and the faces is giving us, telling us how we are going to find entries. Now, when price actually comes to our entry points on 4H, how are we going to go to M15 and use this CRT or reclaim block as confirmation? So see what we mark out on 4H. See what we mark out on 4H. This is the candle that we expect the top of the range to be served. For those that watch the CRT video, I'm not going back to that. This is the total soup. And what is the law that the total soup says? That after the closure, right? After the closure of the candle, okay, let me dwell more on CRT now. I said the hours you're going to use to trade CRT. CRT as a component in itself is based on candle closure, right? 4-hour candle closure. 4-hour candle closure. So if you see a candle, if you see price approaching a PDRA or your point of interest, then on your 4-hour time frame, and you see a candle sweep the previous candle, it must be an independent candle. If you have watched CRT video, you know what independent candle is. If you don't know what independent candle is, it's actually it's not an inside bar candle. Inside bar candle does not have liquidity on top of them. But if it's an independent candle, and you know what independent candle is, if a total soup candle that sweep the low, if it's a bullish trend, if you sweep the low of that candle and closes inside, if you sweep the low and closes inside, I've already marked it on 4H, so you can't see it clearly here. This is M15 now. This is M15. So if you sweep the low and closes inside, you mark the range candle itself, mark the wick of the total soup candle. So the body is already on top. It closes on top, and see where it closes. As at the time I marked this on April 25, it has not retraced. Then I would have marked, I said, I also talk about balanced price range, right? This is an FVG that is manipulation. It inverts it, it retraces, inverts it again. This is the full inverse now. So I would have said, okay, I can use this extreme entry as extreme PDRA, that's the balanced price range, as my entry. I can as well use this place. All right, but for this case, I'm going to use 50%, 50%, 50%, 50% of my range candle, 50% of my wick, all right, as entry. And once I do that, You see my entry is here, right? My entry is here, my entry is here. Then my PDRA, I said my PDRA, my stop loss is at the low of the total soup candle. And what did this give us? What did it give us? This give us almost 1 ratio, what's it called? 1:5, okay, 1:4 plus. Give us 1:4. All right, entry, and it's a clean entry. So this is how you can use CRT to frame entries on 4H and coming back on M15 to execute it. All right, this is CRT. This is CRT. All right, let's go back to 4H and find out about the second CRT that it gave us. Let's go back to 4H and find out about the second CRT that it gave us. So this is how you're going to use the storyline so that when price come to your entry, your POIs on 4H, the CRT is going to give you confluence, or reclaim block will also going to give you confluence. If you don't see CRT, you're going to see reclaim block. Okay, see the second part. See the second part. This is also clean CRT, right? But we have just explained the first part of CRT. There's no need for us to dwell on that CRT again. There's no need for us to dwell on that CRT again. Adibin is reclaim block now. Say, let's mark this place too. You see, you have already exited this trade here, but it retraces back to the PDRA again, the breaker after sweeping, to confirm the strong load for the second term, and it still rejects, closes inside the candle. This is the another CRT entry. You enter from here, then you exit. Let's look at what this place is. Maybe it's a reclaim block on M15, and let's confirm what here has for us on M15. After you tap for the third term, you will mark it, and the candle retraces and closes inside. Let's go and check what that place is on M15. Let's go and check what that place is on M15. Let's go and check what that place is on M15. Okay, this M15. Let's retrace it back to that price action. Let's retrace it back to that price action. Let's retrace it back to that price action and see if it's it gave us reclaim block as entry after sweeping or minor low on 4H and also tapping on our breaker. Where is the price action here? Okay, all right, this is the place. This is the place. Okay, so what price action did he give us here? What price action did he give us? He gave us a reclaim block. He gave a reclaim block. He gave us a reclaim block. All right, see the CRT formation here that retraces and peak. See the after the closure it retraces and peak. So as it's moving, it come back and retest our breaker again. This time around, this is the one we refer to. So let's draw this block. Let's draw this block. Let's draw what's the block that was invalidated. Okay, you see this block was this is the low it swept. This block was invalidated. This block was invalidated but got reclaimed. This block was invalidated but got reclaimed. And as it got reclaimed, this is the first what's it called, fair value gap that invalidated the block. It got reclaimed. It tested it, wanted to go back in form of a breaker, but eventually got reclaimed. So as it got reclaimed, it retested and continued with the what's it called, the bullish trend. Why are we not entering as it form a breaker? Why are we not entering when it form a breaker here? Because we know that okay, price is now bullish. As price is bullish, we don't expect it to continue, because the objective of every strong guy is to give us a new major high. So our anticipation is after it invalidated this block, M15 block is going to tap on the breaker block, the main breaker block on itself, which is the 4H POI, then reclaimed. So we are not interested in trading this M15 POI as a breaker. So maybe some people enter now after you invalidated retest. Some people will enter and sell, but we know that okay, this is actually going to serve as support, because the storyline on 4H tell us that okay, for every stronger formation we are anticipating a new major high. So you see how the storyline helps us to stay patient for that block to be reclaimed before we are trading it in line with the objective. If you short at that POI, it means you are trading against the 4H objective. You are trading against the 4H bias. You see, All right, I believe you should understand all this I am trying to explain. You should understand all this I'm trying to explain. Okay, let's look at another. This is the last one we just looked at now. Let's delete this so that it will not confuse us, because these are recent price actions now. Okay, price move impulsively because this is a strong low formation now, giving us these breakaway gaps, and it gave us what, a pullback here. When it gives us a pullback, it gives us a major high. What is the objective of every major high is to give us a corrective phase to come and sweep the low, and that's exactly what happened. And look at what happened here. This fair value gap serve as a support, and it's also a breaker block. It's also a breaker block. So when the corrective phase come back to sweep the low, this is M formation. No, I hope we are not forgetting what I said we should picture. A strong low formation, pullback, major high, price come back to sweep, price come back to sweep that low here. You see, so that's M formation. I hope you can see it. Oh, sorry. I hope we can see it. So after that low was swept, I said we are not predicting. We are always waiting to react, for price to react first. After the price has react, so as the price tap on it, some people will have entered here. But for we, our strategy, we have to wait for price to give us the confidence we want to see, and see the clean CRT gave us. Let me go to M15 and mark this CRT out. Let me go to M15 and mark this CRT out. Okay, let me go to M15 and mark this CRT. Let's move to M15 this way. Let's move to M15. Let's move to M15. Let's move to M15. Okay, let's retrace back to that price action. Let's drop back to that price action so that we understand how the storyline, the phase, and the objective, it will also always help us to be at the right side of the market. Let's locate that price action. Okay, here it is. Oh, I did not mark out the CRT on 4H. Oh, I did not mark out the CRT on 4H. I did not mark out the CRT on 4H. Okay, let me go and mark it for the purpose, so that you will get to understand this thing properly. Let me mark out the CRT. Give us a clean CRT formation here. So where is the candle range? This is the candle range. You draw the candle range like this to the top of the candle. Then the one that sweep the range is, you are only interested in the wick. If you have not watched the CRT video, go and watch it again. So I've drawn the candle range now. Let's go back to M15. So we expect the third candle to come back to almost what's it called, the 50% of the wick of the Totosu candle. Then it will now pick it up from there. It will now pick it up from there. Let's find that price action. Let's find that price action. Next time now, we always look at the price action that are very close to what's it called. So see what we just did there, and see what happened. We can even trade this in form of reclaim block. We can trade this as CRT. So this is the range candle. This is the Totosu candle. You see how it looks like. I said CRT is always reclaim block, right? Inverse FVG. So you see our balance price range. Price retested our balance price range. If you go back to the PDR videos, price retested our balance price range. Get price retested at balance price range. All right, and it moves bullish. It closes inside here. At what time is this? At what time is this? This is exactly 5 o'clock, 27th of April. 5 o'clock, 27th of April. So that's why I said, for you to trade with that strategy, the 4H, you are always waiting to close for candle closure on 4H. And what are the times you're going to look at this? In every 24 hours, you are trading 9 a.m., 1 p.m., 5 p.m., 9 p.m., 1 a.m., and 5 a.m. These are the periods in every 24 hours that 4H candle will close, right? Because you are following the 4H bias, and our strategy is you using the 4H candle closure, especially for CRT. Especially for CRT, you are using the 4H candle closure so that when the candle closes at 9 a.m., if it closes and it sweeps the low or the high of the previous independent candle, it means it has swept liquidity of that range, and you are anticipating for price to go and clear the liquidity of the opposing range. Okay, the same thing as 1 p.m. So if you are looking to trade it in form of reclaim block, you cannot say, okay, instead of me to wait for CRT at 1 p.m., what if I find balance price range? What if I find balance price range period to the candle closure. That is, I can enter the minute I find, because there are some that will close inside and they will not retrace again. If you see some of our trade that we do send a signal group, some will retrace it inside, close inside, but they will never come back to the BPR. If you don't want to miss some of those trades and you want to trade it in form of reclaim block, if you find a reclaim block and it is not yet time, you can find then 1 hour period to do stems. For example, that of 9 a.m. now, you can be on your chart by 8 a.m. and be finding CRT at the same time finding reclaim block. You can enter a reclaim block even before the candle closure. So far, you are trading in line with the objective, and you are trading with where you are following where 4H swing trend is going. You are trading in line with the objective, and you are trading in line with where the 4H swing trend is going. You are following the 4H bias, the order flow. That's why I'm saying in line with the objective. The objective of every high low is to, in the bullish trend, is to give us a new high. For this case, we are still following the 4H bullish. So you can trade this as CRT, you can trade it as reclaim block. For me to trade this as CRT, I will just pick my entry at this balance price range here, or after the change of state in state of delivery. The change in state of delivery is here, so wait for price to come and retest the FVG. Then use this set of down close candles, up close candles to serve as breaker, right? You see, and breaker. You know, it has to be a zone, right? You see, price come and retested. Then I will put my entry here. I'll put my entry here, and price just come back to tap on my what's it called entry, then put my stop loss here just below the total soup candle. I will trade this in line with the objective, and that's how many RR for the first before this retracement. And if you are the type that another breaker block here, you can set another entry here before this first retracement. That is almost 1.16 RR, almost 1.7 RR. So you can see this is how you're going to use storyline, objective, and inch pace of price movement to always be. Let's go back to 4H, because it is the 4H that will show you the clear structure you will follow. All right. So as I said our strategy uses 4-hour candle closure. So these are the periods you can trade: 1 a.m., 9 a.m., 1 p.m., 5 p.m., 9 p.m., 1 a.m., 5 a.m. If you want to trade it in form of reclaim block, then be on the chart 1 hour to those times, so that any reclaim block you find and you want to enter in BPR, because there are some after the closure the candle will not retrace back, right? So be on the chart 1 hour before the time, and any reclaim block you find, you can trade it with reclaim block. So we are still following the 4H bullish. The 4H is still bullish even till the end of this price action. The 4H is still bullish. This is our last strong low. Every strong low will give us a new high, right? And at the start of every strong low, we expect a 4H fair value gap. So look at this price action here. Look at this price action here. From here, this pullback, okay, there is no this is not a valid pullback, because yeah, here then price pullback before giving us this major high now come back to shape. You can see that is M. This is not part of it. This is straight leg like this. You can see these are M formation. I hope you can mark structure the right way like this. You can mark structure the right way like this. So but period to this corrective move, so you can trade this in line with our objective. Once this has been created in form of a breaker, price retraces it, did not give us CRT. Let's see what it gives us on M15. Let's mark it and see what it gives us on M15. Price touches that breaker. If it did not give us CRT, let's go to M15. Let's see if it gives us reclaim block on M15. Let's see if it gives us reclaim block on M15. Let's see if it gives us reclaim block on M15. Let's see if it gives us reclaim block. Okay, let's retrace this to that price action so that we'll see how we're going to frame entry with it, either with reclaim block, because it did not give us confluence as CRT on 4H. It did not give us confluence as CRT on 4H. I believe you understand these details. If you don't get your head around it the very first time you're watching this video, that's why I made it in form of a video. You can watch it as many times as possible. And this is what we just draw out now. Okay, this is what we just draw out now. How can we trade this after tapping? You know, it's after you break it, you tap for the first time and you can trade this. When it comes the second time, did it sweep this low? Yes, it invalidated this low, and let's use this block in form of a reclaim block as an invalidated block, right? So price price invalidates that block, and after invalidate it, this is the low now. It reclaimed the block. I'm representing the block in form of a straight line. If I wanted to draw the block proper way, this is how it should have been. So it invalidates it and it come back to the text. It come back to the text. So closing inside. After closing inside, then retest the block. And after retest the block, change the state of CSD happen, change the state of the rig happen, and you can enter like this. What is giving you the convenience to enter? Because you already know that okay, that's a POI there, a breaker block, and you are trading in line with the objective. You are trading following the 4-8 bias, right? Because your major I have not been formed yet. It is your minor I that has been formed. So these are the things that is going to give you the confidence to always follow the 4H and trade in line with the objective. Trade in line with the objective. That is almost one. Okay, some people may run out of the trade here. Okay, let's just bring it down. That's almost 1:99. That's 1:7. Almost 1:7. There's 6.85 there. That's 1:7. So you see, this how you're going to frame your entries. You may not understand it fully, right? But if you watch this video as many times as possible, believe me, you will understand what I'm trying to explain. Let's go back to 4H. Just make sure that you are following the objective. Do not trade against the objective. Try to understand the storyline on 4H. Try to understand the storyline on 4H. Try to understand the current phase of the market. That's why I'm drawing the M again, still drawing it, still drawing it. So after that, it gave us a major I. What the objective of a major I is to come back to sweep the low. The low we anticipated to sweep is this low, actually this low. But see what price did here. This is a very impulsive move to the downside, though it's correcting to come and sweep, right? And this is the low we wanted to sweep. Still, this is our last strong low. Our last strong low has not been taken out. We are still bullish. Since our last strong low has not been taken out, we are still bullish. And when price did here, it did not give us any sell information. It did not give us any sell information, right? So maybe we'll just be patient. It actually reclaimed, then changing state of delivery happened. CSD happened here on 4H. It gave us a minor high. It gave us a minor high, a minor low. It retraces again. This is another minor high, minor low. Why is this also a minor high, not major? Objective of every strong low is to give us a new major low. And so far, the former major low has not been taken out. You can't call this one a major high because this one is a minor high. And you say, okay, since this one is already a minor high, this one is not a major high. No. Objective of every strong low is to give us a major high. A major high must take out the previous major high. Did you understand? Do not be confused. Look at what happened here. This one is a minor high. Quite all right. The price come back to sweep it. Since you say okay, this one is a minor high, this one is a minor low, a minor high. You already have a minor high, a minor low. I said there are times when a minor high and a low can be created many times in a single impulsive move, and price will only come back to take care only to sweep only one. So a minor high was created here, a minor low. Then it doesn't mean that this one too is now major. No, price have not taken out the previous minor high. A new high has not been created in this way. This is the strong low that was created now. So this one is internal structure. This one are internal highs. Though price come back to sweep this low, quite alright. But just understand what structure is saying. Understand what structure is saying. Price now move after sweeping this low. Price now move. So it means this strong high has been transferred. That's what it's telling you. This strong high has been transferred. This strong low has been transferred. This strong low has been transferred to this place because price have swept this place. So this is strong low now. We can trade it because it has swept minor low. Let's see what it is on M15. It gave us a clean CRT. Let's see what it is on M15. Is there need for, okay, let's even draw the CRT. There's no need for us to cycle it again because it's close to the recent price action and we can see it. So here, this is the range candle, right? Then this is the range, the wick we are trying to draw. This is the wick that it will come back to before price will now let's go to M15 and find out. This video, even though it's up to 2 hours, just try to understand, try to watch it to the end so that you can understand these details. If you understand these details, definitely you will trade and you will do well with trading. All right, so let's see what we just mark out. Let's see what it gives us in form of CRT. Okay, so that's a clean CRT formation. Even on M15, though you may miss this trade, but if you're aggressive and price come back and your account is not just a small account, you can enter as it is coming to the 50%. But it's not only 50% you'll be marking. You see a clean, what's it called, balance price range here. You see a clean balance price range here. And even if you wanted to trade it in form of a reclaim block, what block was invalidated? Look at the block that was invalidated. See the block that was invalidated previously, the M15 block that was invalidated. Just see a clean sniper entry here. See a clean sniper entry. So CRT is the same thing as reclaim block. The only difference is the confluence CRT is supposed to show you an M15. Reclaim block will not show you until you come to M15. So on 4H, reclaim block will not show you on 4H until you come to M15. So CRT, reclaim block, they are the same thing. But CRT will show your confluence on 4H. You don't need to come to M15 to see it. But for you to see a reclaim block, you have to come to M15 to see the block, the M15 block that was invalidated before it got reclaimed. You see the block invalidated, then it got reclaimed with inverse FVG. The balance price range of that FVG is the sniper entry. So you see what we get out of it, right? So you see, you're following the objective all this while. These trades are marking, you're following the objective, and that's why it's giving you all these sniper entries going up. That's why it's giving you all these sniper entries going up. So let's say you enter from here now. What's the time? As at the time you enter this trade, this is 1 o'clock, 4th of May. Okay, you leave this trade until it's, let's say it surpasses, maybe not set it, take profit itself. So let's see what this trade will give you. Even with the smallest loss size on jump 1, jump 10, it will give you, that's how much. Let me see the number here. Okay, 0.01, I think that should be almost $13. Yeah, that should be almost $13, but that's 1,333 times 0.0, that should be almost $13. If you have multiple positions, let's say like 5 positions, because the margin call for 0.01 is not for jump 110 is not that big, so you will know how much that will fetch you. So that's CRT, basically trading it in line with 4H swing structure, that is following the objective. You're not trading against the objective. And see another thing, see another very interesting thing. This is a mitigation, right? See a mitigation here. After you have entered here, see a mitigation, right? A high probability mitigation. If you remember, I say reclaim mitigation when we are discussing PDRAs. See this I, you see this I, it got invalidated. This another block, it got invalidated going up. It got invalidated going up, right? So instead of it to form a mitigation block, price moving this way, you see price supposed to retest moving this way, it failed. It failed, and is that failure that come and sweep. After the sweeping now, we now know that okay, this will eventually got broken because CRT has given us confirmation that this will eventually got broken, right? So as it got broken, we can frame another entry because this is a reclaimed mitigation now. This is a reclaimed mitigation. So when it now break it on retest, it hold. Not only in that place, another retest. So this retest is a confirmation that is going to hold price again. The moment it retest and CSD happen, CISD happen, change the state of delivery happen, your another entry is confirmed. Another entry is confirmed. You are still following the 4H, though changing structure, not changing structure, corrective phase have happened as yeah, because the last swing low have been taken out. But still, this is another almost 1.5 RR if you want to trade it in form of reclaim mitigation, because this is high probability. Anywhere you see this is high probability. This is not a simple mitigation. This is a reclaim. This area of value is holding because it failed. As it failed, it's supposed to give us a break, a mitigation block. Then mitigation block now failed again. It's supposed to give us a reclaim block to trade it down. The reclaim block now failed. Now this is now reclaim mitigation. Watch this video as many times as possible, you understand it. So as Bryce give us this new II, let's go back to our 4H so that we can understand the structure properly. M15 will give you a lot of noise. Execution is on M15. Marking of structure is on 4H. Do not make that mistake. Marking of structure is on 4H. When you want to execute, come to M15. So this is the last strong low. I said the low, here this strong low has been transferred because this one is super liquidity. All right. So it gave us a mitigation block. We traded it. It gave us CRT confirmation. We traded it. Now price gave us a new major high. 4H is still bullish. What is this phase telling us? This is a corrective phase. And what's the objective of every corrective phase? Is to come and sweep a low. Did we have any low to sweep here? Maybe this little pullback, I don't know. But price is on a corrective phase at the moment. There is no any there's a PDR here. You see, this is PDR here. FVG, this is FVG here. Price is already inside our FVG, and it has rejected. You can see this strong rejection here. Even as price tap on it, you can trade this in form of a claim block. Let's go to M15 and see if there's a claim block here. It is inside FVG, so it's a probability. And you see that's rejection now again. That's another CRT. You can mark the week, then come back. Price is coming back to retest the 50% or 75% of the week for it to project up. For it to project up, you can see, for it to project up, because 4H is still bullish. No change of character has happened on 4H. For change of character to happen on 4H, it means this last strong low must be invalidated. This last strong low must be invalidated. Hope this video will not be too long. Hope it will not be too long. So that's that about jump 10, how you are going to use trailing line, phases, and objective. The two phases is the impulsive phase and the corrective phase. Once you're able to understand the current phase you are in, what is the objective of that movement? Simple as that. What is the objective of that movement? If you see a CRT telling you to trade against the current objective, try to be cautious. You may trade it, but it may reverse. So maybe you are just trying to hope in and hope out immediately. So whenever you see a CRT telling you to trade in line with the objective, once you understand structure and it's telling you to trade in line with the objective, against the objective, try to think twice. Try to think twice so that you will not encounter loss. Are you with me? Let's go to another pair, maybe one or two more pairs. Even this video is 2 hours. Just take your time and watch it. It's better to understand this thing, how to market. The purpose of this last video is to understand how to market, how to frame your entries, on how to find the direction on 4H, and how to be able to enter on M15 when it gets to your POI. So even though this video is 2 hours, no problem. Let's go to another pair and please. But even with this one, I believe you should have understand, if not all, the basic idea behind our entries and our exit, how to use the candle range, CRT, how to use the reclaim block, how to follow the bias, how to follow trade in line with the objective and not against it. You must have understand these things. But let's see one or two more pairs before we call it a day. Let's see one or two more pairs before we call it a day. All right, this V75 index. This V75 index. Is it already on 4H? Good. This 4H already. So let's see fast. Just like we did with jump 10 index. Let's start from here. Yeah, let's start from here. But for this time, we are going to be very fast. Since we won't be able to mark the M15s of this one, we'll just explain briefly how the storyline and how the phases and objectives were before we frame the entries we got. All right, so this is the last strong low from this bearish 4H strong trend. This is the 4H trend, the last trend, the last bearish order flow, and price gets here. Instead of price to continue to mitigate this high and to continue, what we call a change in trend happen. Why did the change in trend happen? We have price creating this high, this minor high, minor low, a major high, it come back to sweep. As it come back to sweep this low, I believe you can see this, or it's too small. Okay, let me enlarge this more for those that will be using phone to watch this. If you stick to this video, you watch it many times and you start trading and you start making money. Even though you're using phone, you get something that is bigger, let's say a pad like what I'm using now, or a laptop, preferably, or a pad. Yeah, so you see, because you're enjoying what's it called, marking out your structures on the wider screen, actually not on phone, and you have a mouse. What I'm using now is a mouse. If it's on screen now, if it's on a phone, I will be able to mark it out, but not as flexible as this. So it sweep it, right? As it sweep it, this is strong high, a strong low. Now the objective of every strong low is to give us a new high, and that eventually happened. But do you know why we are not going to trade in this in the first place? This low is not yet confirmed a strong low, right? Until change of character happen. And where did change of character happen? The invalidation, because here this major high did not sweep this high, it just mitigated, but eventually here it break it with even a fair value gap. So it is here that we now know, okay, change of character have happened. So what is the objective of this strong low now? Is to give us a new high, a major high. And the objective of this previous trend is complete here. This is a new objective now going up. I hope you understand. The moment this fair value gap print this price action of us for us, we know that this is a new objective going up. For those people that are trading trend line break and retest, they will have this way. And that is the, what's it called, the fair value gap that break the trend line, and they will be open for a test. They'll be open for a text, but we were using structure. We're using structure. So it actually retested our breaker, you see. After that, it retested our breaker, and you can give us a clean CRT, give us a clean CRT. All right, it gave us a minor high, minor low, major high, yeah, major high. And since this is a breaker block and breaker always support reversals, it did not sweep this low. You can see that it did not sweep this low. This is a minor high, minor low, minor high, minor low. The two high and low here are minor. Even the next one is minor. Because of this breaker, price just retest it. Did not allow it to sweep it. So until it gave us this minor high. This minor high now gave us another minor low. This minor low now give us another minor high with a minor low. This is the last minor a major high created before price was able to sweep the low. I hope you can see. So our next strong low, you see all this leg is a straight leg. Try to understand this. From here, from this strong low to this major high, is one single leg. It's one single leg. I believe you understand this. Then coming, this is impulsive corrective. A sweep liquidity, tap on this fair value gap. This is the next strong low. This strong low now, the objective is to give us a new high. Is this a valid what's it called, pullback? On F15 it might, but it's not clear here on 4H. But since price come back and tap on this breaker, a mitigation block, it's not a breaker, this support is from this existing bullish trend. So this is a mitigation with hidden FVG, hidden other block, and also the presence of an FVG. So it should hold. This liquidity level should be cleared, should be seen on M15. That's why I mark it. So it's tap. Here we can enter in form of a claim block. There is no CRT here in form of a claim block. This is the next, what's it called, swing low and strong low. Objective is to give us a new major high. And what happened? Yeah, this is a minor high, minor low. This one wicked is considered it is weak. So the weakening is also a form of break for me, and that's why we have a major high here and price come back and sweep. Price sweeping, this is a clean CRT with FVG, CRT with FVG, confirm entry. We are trading in line with the objective. So this thing is very simple. I believe you see what I'm marking out and you understand it. Price coming here, this is the next strong low. This is a minor high. Why is it a minor high? The last major high has not been taken out. This is a minor low. This minor low is a kind of sweep liquidity. The strong low has been shifted to this place. The strong low has been shifted to this place. And this strong low now created a series of minor structures inside. None of these structures was able to sweep.
None of these structures is able to sweep the low. This one did not sweep this because um, this I is a dependent candle. That's why you need to understand the dependent candle and independent candle. You are looking like, okay, this week sweep this. No, this is independent because this candle is independent candle. It's not take out this candle. So this make this dependent candle, and you cannot count dependent candles. You can't make reference to them when you're marking structure. So here is not a sweep. This move is a complete one leg from this last swing what's it called, strong low to this place, complete one leg. Are you with me? Then this movement too, this did not sweep any eye. It reverses. All these ones are internal structure. This one just mitigate, did not sweep as well. This is where it comes to another leg. You see, you can only trade their mitigations. You can only trade their mitigations. Even here, you can trade their mitigations in line with the structure. Mitigation in line with the structure. So this is where it come back to sweep, and it sweep this low, this inducement created, because this is one of the lowest legs created after the breaker. So it sweep that, tap on this rejection block of the previous strong low, and since we know that a strong low will hold because the bullish the 4H is bullish, the swing structure is bullish, and our objective is to always create a new II until the overall objective of that move is complete. Maybe on a weekly or daily it's draw on liquidity. That's when we know, okay, we should anticipate a change in direction. But for now, a strong low must hold. Maybe when we go to daily or 4H, this movement has not tapped on any positive call higher time frame PDRA. Then we don't expect it to change direction now until it tap on higher time frame PDRA or a POI. All right, so it gave us this strong low. This strong low is a clean CRT entry that tap on this FVG and this rejection block. This rejection block, the low of this rejection block is actually a strong low because this strong low has been shifted. This low shift liquidity. Fine. A new strong low. What's the function of every objective of every strong low? To give us a new high that will break the previous major high. So this is the minor high, the minor low, the major high now. Coming back to sweep, you can see the M formation. Just picture this M and you're good to go with structure. Price will always come back to sweep the M. Then as it sweep, is that reclaim block or CLT? If you go to M15, you'll find out. But you must find a reclaim block. You must find a reclaim block. Even though the very first CLT did not go high, you can still trade it and make profit there because this is 4H candle. The moment of this candle from here to here, we jumped 110 in volatility 75. Let's see, this is where it started. Yeah, that's okay, that's almost $2 with the lowest loss size for people that have account of less than $10, $5. So if you enter how many positions? 5. That's 2 times 10. 5 times 10, 5 times 2, that's $10 already. If you did not trade that one, you must find a claim block here and see this. After this is the last strong low. After this strong low formation, see what happened. Impulsive move, impulsive move, minor pullback. That I is not a major I. Why? There is not any valid pullbacks here. This is the pullback before it give us this major I. All these are the internal structure. None of this low strip liquidity. This one mitigate. It gave us CLT. You can even trade it in line. You see, this is a mitigation block. You can trade it in line until this major I come back. The objective of major I is to come and sweep the structural low. It sweep. It gave us CLT. Candle closes inside. You can trade it in form of reclaim block. So when you go to M15, this reclaim block, this block must be validated. Price reclaim it. Fine. Trade it in line. Trade it in line. So this is the final. This is the last strong low. Okay, we are closer to the recent price action now. Let's see if we can begin to look at the entries on M15, so that when we go back, should we mark out this? Okay, let's see. This one should be in form of reclaim block. Let's go and see this on M15. Let's go and see this on M15. Let's go and see this on M15. So let's go and see this on M15. Let's go and see this on M15. Okay, fine. This video should not be boring to you because if you actually pay attention to all what I've been saying from the beginning of this video, it will not be boring to you. In fact, you will just enjoy this part where I'm trying to show you how to actually enter it on M15. This is the most important part you need, right? This is the most important part you need. That's why I'm taking out my time to go through the details very well. After you watch this video and you understand this, there is nothing you expect someone to come and okay. Where is the part I marked? Okay. Oh, this ones I just it was previous drawing. This is the part I was actually looking at to see if I will to see if I will see an entry because this is when this ones I traded in form of retracement. You know the objective of every major eye is to come and sweep. So trade it in line. But look at this place. The block was invalidated here. No CRT here. Okay, you can trade in form of CRT, but it was not showing you confluence on M15. But if you want to trade in form of reclaim block, this is the block that was invalidated before reclaiming. Yeah. So let's draw it to the right side. Here you can see as it got reclaimed, it's actually come back to retest. It come back to retest. I hope you can see here. It come back to retest. Just here you can see it come back to retest on M15. I hope you can see clearly. Then we can enter there and put our stop loss just below this low like this, and we can wait patiently. Even though it's from this first reversal we exit, that's almost 1:4 plus 1:4 plus. But for people that do old trade for a long time, we know that we are following the structure, we are following the 4-inch bias, we are following the objective, we are not trading against the objective. This trade must definitely go. Even though I have multiple positions, if I close some, even though the remaining one will go against me, fine. So far it does not make me enter into a drawdown or like I will have to. So far the remaining ones I will want to leave so that it will go up. I will leave them and see it created a mitigation block here. Price come back to tap on the mitigation and continue up. So if you have multiple position, just take partial profit as it gets here. Allow the remaining ones to move forward because you are very confident that this trade is going to go up. You are trading large objective. You are not trading against it. You enter from a valid POI, right? And it actually got reclaimed before you enter. So those things will make you confident to follow up the trade. All right. So you can see how we frame that entry right from 4H. Let's go back to 4H and look at the next one. We are looking at these ones on 4H because they are close to the recent price action. We can easily retrace this as derive is not allowing us to use replay to. So that's a strong low formation there, and at every start of a strong low, we expect a FVG. But in this case, this FVG was mitigated but still hold in form of a breaker. Let me delete this in so that you can see what I'm trying to explain. You can see that it's still holding form of a breaker and this breaker hold. So this is a minor high, a minor low, a major high. But you see, this major high is also in form of a minor high. Why is it a minor high? The objective of every major high is to come back and sweep the low. This high only stop at the breaker, it did not come back to sweep the low. So this major high is also in form of is now a minor high. It did not sweep the low. For this to become major, it has to sweep both sides of liquidity. Are you with me from our structure class? It has to sweep both sides of liquidity. So it really come back to tap on this breaker, this mitigation. In this case, mitigation. So this is a minor high now. The same thing happened here. It gave us another high, but this high did not come back to sweep this low. Another mitigation. So you can continue to trade these mitigations. Let's see what these mitigations have for us. For example, let's see what happened here in this is clean CRT. Let me mark this CRT from here. Let me mark this CRT from here and go to M15 and see. This is a clean CRT. Let's take our time to actually know this thing, so that you know when you go back to practice with on your own, you will get it clearly. Another CRT formation second time, another CRT formation second time. This another candle range. Then did you see how I'm marking it, or you're not seeing it, or the video is not let me expand and zoom it very well if you're not seeing it, so that you see how I marked the two. So let's go to M15 and check out what we did here. Let me use cycle to actually um, know where we marked. You know, if it is a recent price action here, there's no need for you to use cycle, because as you turn to M15, you see it immediately. So let's go to M15. Let's go to M15. Let's go to M15. All right. So let's go to M15. Let's check the price action. Let's check the price action. All right. Let's check the price action of where we just marked. Let's see how those CRTs gave us a sniper entry. Why did they give us a sniper entry? They tap on our POI, and okay, this is where we just, all right, this is where we just marked. So look at these two CRTs. Look at the two CRTs we marked. Let's see how they give us a sniper entry. Okay, the candle closes inside. For the first instance, we anticipate that after touching our breaker block, mitigation block in this case, so we anticipate that it's going to retrace to 50% or 50% or 75%. This 50% of the pursuit candle, right? Fine. Let's take our position to, we are trading in line with the objective. So you see, it give us how many RR before retracing and going back to that's what's it called? How many RR did it give? But putting our stop loss there. That's almost 1:4 RR for the first case. The second one, is here. So CRT from 4H is giving us these entries sniperly. You can see how we enter there. You can see here too, 50% or change the state of delivery. Let me bold it so that we can see it clearly. It closes inside, so 50%, or where we see a change in state of delivery happen here, right? Change state of delivery happen here. This close candle, this candle that engulfed the previous, this candle here. So we don't expect price to go below this candle. We can use also a form of reclaim block. We can use this block invalidated. That block was invalidated, price invalidated, it got to reclaim. We're going to use 50% in form of 50%, what's it called? CSD. We don't expect any candle to go below this. It's going to serve as support. So draw it out. That is our CRT. We want to use reclaim block. Use this block here that was invalidated in this other block. Draw it to the left. See, two confluence, telling you where price will come and test. Before moving. So you see this place, yeah, that's your entry. And as you enter, price actually move, retraces your entry, almost your entry. Then why are you confident not to close? Because you know the price will definitely buy, because it has tapped on your mitigation, it has closes inside many conferences. It gives you CLT on 4H. How many RR is that? 1:9 RR, almost 1:9. Did you understand all these things? If you don't understand, even though this video takes 2 hours, try to watch it as many times as possible. If you watch it as many times as possible, believe you me, you will, the more you watch it, the more clarity you get at each time you rewatch, and you will definitely try to understand what, and even the way I explain it, you should understand. But for this video not to become too long, I think I should have to just stop here. You understand every details I've explained here. The same thing, reclaim block, mitigation. Here I'm trying to talk on storyline and objective now. It gave us mitigation, right? This is not a major eye. This is not a major eye because a major objective of a major eye, it will come and sweep the low. It didn't come. It tapped on our mitigation block. It gave us, it don't even give us right here, but you can trade it in reclaim block. Here you can trade it in form of a reclaim block. Should we go and look at this and everything? No need. Trading it in form of reclaim block to give us this eye. This eye can be our major eye now. Why is it a major eye? First of all, it cleared the last major low, right? If it clear here, if it clear this low and continue upward, we say okay, this is the last inducement is safe. But as it cleared this low, it didn't give us a new high. If it cleared this low, we would have said okay, this low is the next strong low. But what we call temporary or internal market structure shift happen here. All right, so that's why the market reverses and this breaker hold. You can see this is a clean breaker. FVG breakaway gaps, hidden order block, they are in line, perfectly in line with the breaker. So that makes it high probability. How are you going to trade this breaker now? And what makes you think this breaker is good to trade? After a major high, objective is to come and sweep the low. So it has swept this low, but forming a breaker, it means this is not the last low it's going to sweep. That's why you can enter with that breaker. Since the objective of this major high is to come and sweep the low, or you don't even know whether the market have changed character, or maybe this for is a structure. Let's look at daily. Let's look at daily for us to know if this entire movement, this entire leg, maybe the objective has ended on daily. Let's go to daily. Let's go to daily. That's to tell you that okay, when you understand structure very well, there's no need for you to suffer trading. Oh, you see, this actually mitigates daily POI. We are in daily 24 hours now, you can see. So you see, you see, this actually mitigates a daily POI. That's what caused that temporary market structure shift. You see, daily is bearish. This is a strong low, a strong high from daily that's supposed to hold. Another strong high, right? That's supposed to hold. Here has been mitigated before. So this is the last mitigation now that price just have, and that's what actually caused this internal structure shift. So the entire objective of this bullish move is complete. This 4H, that was moving bullish that you're following up, following up, following up. So when you understand structure, I said it will prevent you from being at the wrong side of the market, for you to develop wrong expectation. Why did we get this expectation right now? So far we see a change in character. We come to daily, we understand that it mitigates the last high that's supposed to be mitigated before it will continue with the daily full trend, and that's what happened. So our anticipation now is to trade this following the objective going bearish, because the daily now have turned bearish. That's what the objective is telling us. That's what the storyline is telling us. The storyline and the objective on daily, that's what they're telling us. Let's go to our 4H that we do follow. Let's go to 4H that we do follow. Okay, we are back to the 4H. We are back to the 4H. So we trade this mitigation. It gave us a new low, and it retraces our objective. We are following the objective now. Another mitigation. This is a clean CRT. We will trade it down. A clean CRT. So anyone that is high probability for us to trade now must be bearish, right? It give us a new high. Give us this high. Come back. The last strong low has not been taken out, so we can't say fully that yes, the price has turned bearish. This is our last strong low. This entire move was just internal highs. Hope you remember. Okay, so when price now got here, it gave us a clean CRT, or reclaim block as you may call it. This is CRT. When you go to M15, you may find a reclaim block here. For the trade, you can give us CRT. It sweep this high. It sweep this high. And once you sweep this high, since we are bearish here, you might enter, right, and trade it downward. But still, the last strong low is still protected. Price did not close with body below it. Price did not close even on 4H. Price did not close with body, and price gave us CRT confirmation and is going up. You see, price give us CRT confirmation and it's going up. How did we know that the price is not fully bearish? The 4H is not fully bearish. The change of character that happened is internet change of character here. For us to confirm a full change of character on 4H, this last strong low must be taken out. But what the price did, price come to this strong low, it rejected, you know it's a zone. It's a zone. It come here for the first time. See this rejection block. It tap on the rejection block here. It tap on the rejection block here. It rejected, giving us CRT, going up to see this structural high. It come back for the second time. It did not still break the block. Meanwhile, he just tapped inside it and rejected at the midway of it. That mid part of it, it gave us a CRT and it's now trading up. So we react to price, we do not predict. Let's wait for what we can trade the CRT up. Oh, it has given us the profit you want to give us. But we just know at the back of our mind that okay, until it breaks this strong low before we can now anticipate full bearish trend. That's what I'm trying to explain. That is V75. Can we touch one at least? See, because this is the part you need. Let's just touch, let's see one more set. And okay, we are done job 10. Let's do jump to 5 and see if we will get some, what's it called, storyline, face, and objective there as well. Okay, we will be fast with this. We try as much as possible to be fast with this. So I actually, these are the assets I trade personally. All right, so that's why I've already marked what this thing, the previous price actions. Don't let me go back. We already understand the storyline on 4H, how you're going to use it to always be at the right side of the market. Look, a nice. Where should I? Okay, let me start here. Why do we have change in direction from this current move? Price was actually, was it there? Okay, there is a kind of what's it called, internal market structure shift happening here. You know, price turn bearish before it turn bullish. So once price take out this high from this bearish trend, we anticipate that it's going to take out this high to continue with the bearish trend. But what happened? It did not. It gave us this minor high. This is a minor high because there's not any minor high here, right? So this minor high, we anticipate that this minor high will come back, then create a major high for you to come and sweep before you continue. But creating a minor high like this, it generates engineer liquidity here. Price sweep it. As price sweep it, there is a breaker block used as support. So this is a strong low. This is the last strong low. It created another strong low and break this block and give us a new breakaway gaps this way up on this high. That tells us there's another strong low. Internal market structure shift happened, right? Indicating this is now a bullish trend. And after this high was created, this high is not a major high now, right? Because it did not sweep the low, or did not sweep this low. If it come back to sweep this low, we would have said this is the minor low, this is inducement, and this would be the next low that was created should be the strong low, but it did not come back. So this is our strong low. If that's a strong low, this is a minor low, minor low, minor low. You can see all this low did not sweep a minor low, until it created a major high here. What the objective of a major high is to come back and sweep the inducement. Which inducement is valid for us to come and sweep? We don't know. So we just keep trading in line with the objective. What the objective of a major high is to come and sweep the liquidity of the inducement. So here, a minor high, a minor structure. But look at something here. Look at something. This is a reclaim mitigation that is high probability, right? When price created this low, it invalidated this other block. Invalidating this other block is supposed to create what we call a mitigation, right? For price to continue to trade, right? For price to continue to trade like this. But it failed. So it failed, but price is bullish. So we don't expect it to create a reclaim block like this and go down, because from the storyline, the price is bullish, right? And our objective is that every strong low will give us a major high, So some people say, okay, since this low has given us this high has given us this minor low, and this should be a new major high, so that you come back and sweep it. But we do not act, we react, right? So we wait patiently for price to touch this. If it's going to be in form of reclaimed, we will go to M15 and see it for ourselves. But on 4H, it did not show us CRT formation. On M15, it did not reclaim. That's why we wait patiently and it broke it up. Now that it has broken it up, and we know that broken it up is what we anticipate pertaining to our objective and our storyline, and trading in line with the objective, trading in line with 4H, where 4 is going. So we, from our end, broken it is testifying to what we expect from it. We now know that coming back to it is going to be what? A reclaim mitigation. Why is it reclaim mitigation? Breakout fail. As breakout fail, it's supposed to create a mitigation in the first place. Mitigation failed, but this mitigation that failed is against what the storyline tells us, is against what the objective tells us. So that's why I said you are not just going to see that, okay, how did I know that this one will do? The storyline and the objective must have already tell you where you want to go. So if it fail and go against what the storyline is saying, you'll be patient. If it fail and go against what the objective is saying, you'll be patient. And price eventually, when it now fails, see that it even give us a clean CRT here. Price reclaim it. As it reclaimed, touching it, it will give us high probability trades. And see what happened here. You see a reclaim block here, see CRT here, see another reclaim block, trade it in line. But overall, you know that the objective of what every major high is to come and sweep the liquidity. So that's why when it mitigates this high again, it must fulfill its objective. It come down and sweep this low. As it come down and sweep this low, okay, fine. We now have a new strong low going up. What the objective of every strong low is to give us a new high. It creates a minor high, a minor low with a rejection block. This is a major high now. This is a major high, right? In within this context, this is a major high, because for us to have a real major high, it means it must take the previous major high above. But within this context here, this like a major high because it come back to sweep. So we treat it this way. It come back to sweep. As it come back to sweep, we tap on this rejection block. What gives us more confidence and confirmation is the rejection block. We find the claim block here on 15. This is our another strong low, a minor high, create engineer liquidity. As it creates engineer liquidity, it come back to sweep. We can also trade this in form of reclaim on M15. We're not going to M15 to check, but you see clearly that this is reclaim block on M15. Once you just mark this cycle and go to M15 now. Going up, this is our last strong low. This is a single leg, right? Despite the fact that it came and sweep this in form of engineer liquidity, this is a single leg. It created a mitigation block. Coming down to sweep, to tap on that mitigation block, it creates its sweep liquidity of the minor high low that was created previous to this major high. This high is strong low. This, from this strong low, we are now have the new strong low. This new strong low, it did not give us CRT, but when we go to M15, we must definitely find a clean block. It gave us a breaker block. Yeah, it gave us a mitigation block, but no presence of FBG. But CRT gave us confirmation. CRT gave us confirmation. Let's take time and go to M15 and check it for us to know that, okay, once you're trading line objective and you are using these confluences to enter, you always, even though you set limits and not retrieve to it, but your bias will always be right. Let's go to M15 and check that CRT I just marked. So let me, so that it's not a recent price action, so that I'll find it easily. If it's present price action, you will see it immediately. So M15, let's go and see what M15 is telling us. Let's go and see what M15 is telling us. Okay, all right. So these are M15. Let's go to what we just marked. Why is it giving us the confirmation? Because it's tapped on our mitigation block. Here you're not seeing that as mitigation block, but on 4H is a mitigation block. That's why the 4H structure is more clear to see. M15 should just be your execution. Try to mark structures on 4H. So This is clear, range candle, turtle soup, retraces, retraces to the order block or to the M15, 50% of the week. But in this case, this is where the change in state of delivery happens. So we are going to be making use of that order block. Ordinarily, for price to come and pick again, it will not go below it. And see the sniper entry we have there. We see this on 4H. For everything is our sniper entry. You see, the signals we send to the group, and you see a sniper sharp entry before it reverses. This is how everything is. How everything is. So that's why I said if you truly want to take trading to another level and you're serious with these 4 videos I sent, even though you go back and watch videos of what's it called, CRT structure and PDR again as many times as possible. Also try to watch the 4 videos, go back, but this time around with more focus, with more attention. Try to learn every bit of things I discussed in those 3 videos and even this current video. Believe me, you will do well. If you truly understand them, you will do well. So I think let's just run everything up here. Let's run everything up here. This is the last example I show on Jump 25 price. Before I can see, before I can analyze structure, I have to go to 4H and what actually happened as it break this breaker, this mitigation block, it come back to retest. Coming back to the test, should we go to 4H and analyze what happened here? This is a recent price actually. So on 4H, we will be able to understand the full details. But from the price story, the face and the objective is still bullish. Everything is still bullish on 4H. So we continue to trade in line of 4H. This is our last strong low that have not been taken out. This is just a mitigation part. So even though this breaker will failed, even though it will come down after this reaction, it will just come back and take this inducement before it is still bullish. All right, we have come to the end of this series, this entry masterclass series. For those that did not watch the very first 3 videos, I will advise you to go back, watch them, try to get detailed idea of what we discussed in those 3 videos, so that you come back and rewatch this fourth video on entries. This is how we use CRT to frame our entries as Zenith trade. This is how we use reclaim block to frame our entries. Like for this case, if you want to enter with reclaim block now, you can also enter with reclaim block. CRT is the same with reclaim block. The only difference is when you see confirmation or confluence on 4H with CRT, you will not see reclaim block like that. But when you come to M15, see the reclaim block, you can see that it's confirmed. The balance price range, everything is within this region, right? So that's the last, what's it called, the valid pullback order block that was invalidated, right? And even sweep liquidity. And as I draw it, you see the same thing with the PDRA, but let me change the color so that you see what is there. You see the block I just drew now. Let me change the color to green. Oh, let me change it to a different color that is not the same with the candles color. Okay, fine. So you can see where CRT gave me entry, I say entrance, is also the same where reclaim block suggested I should put my entry, and that's where price actually tapped before giving us this. How many RR? 1:8 RR. Fine. So watch this video as many times as possible. I'm advising you to watch it as many times as possible. This very first time you're watching it, you might not gain much. Everything might look confused to you. I'm telling you, when we started learning, when we watch YouTube videos, we will be as confused as someone that just get lost. And but we go back, watch again, watch as many times as possible, study it. Each time we go back, we discover that we learned something new that we couldn't get when we first watched it. We go back, we watch again, we discover we learn another something new. We go back to watch again, we discover we learn something new. So the more you watch, the more clarity you will attain, you will get from all these things we have discussed. You are not going to get it on a single time you watch it like this. So the more time you devoted to these videos to watch them, especially this last one on reclaim block, CRT and mitigation, you more clarity you are going to get. And anywhere you need clarification, just time me. You can see my number at the bottom left hand side of your screen, 703553118. Dial me, I will attend to you. If you need clarification, dial me, I will attend to you. I made that a promise. Then this is going to be the last video on this series of entry masterclass. I do hope these videos will help you and to propel you in and help you navigate the financial market the right way and make it profitable. And if you're already profitable, since you have taken your time to watch it to this end, I believe you must have had one or two things to your arsenal. All right, we have a light member group, we have pro traders group, right? Let me reiterate on this again. Watch this video as many times as possible. When you do so, you will become very good. You start trading yourself, and when you start trading yourself, even though you are not you when you start trading yourself, even though you are not you don't like win many trades, but if you give me feedback on my dime and send me the results of your getting, then I will add you to the elite or the pro traders group. And the benefit of that group is any trade you forward to that group, we'll review together the mistakes you made. If you have a trade, you send it to the group. If it goes fine, it means your analysis is right. It's building your confidence. But if you go to Excel, we will review the trade and let you know why the trade did not do well. So, but for you to join that group, you must practice. You must show us that you are trading. You must show us that you are consistently practicing. Are you okay? So you can't just dime and say, "Let me add you to the group," and yeah, we had you. No, you must have shown that you are practicing, you are trading, even though it's demo. Your entry to TP, you must show us the execution, everything consistently, at least for a month or some weeks. All right. So before I can add you to that group, so let me reiterate on this. Watch as many times as possible. The sell-to video, the structure video, PD arrays, and the last one. This very one is very important. This very one is very important. This is basically the hedge you have on trading on Zenith trades. Um, if you do, believe you me, and follow every steps I have stated out in these 4 videos, you will become profitable. All right. For those who truly want to take this trading everything to the next level, I'll be waiting for your feedbacks on my dime. Do have a nice day and bye for now.